All right, well, we have over 30 people on the call so far, so I think that's a good point to get started. Thank you, everybody, for being on time tonight and joining us for the discussion. If this is your first time joining us, this is our JUMPinar series, which we host both in person at our office in Germantown and virtually here on Zoom webinar. And the benefit of the virtual ones is that we'll be recording tonight's session, so you'll be able to access it later. And we're also going to have a live Q&A at the end of tonight in the last 15 minutes or so to answer any questions you have about the topic. So we cover a variety of special topics in real estate development, everything. We've had property sourcing JUMPinars, construction JUMPinars, leasing and landlording. And tonight we're talking about a particularly important part of the process that is sometimes a little bit confusing for folks who haven't done it for the first time or might be new to the world of real estate. But it's something that every property transaction comes with, and that's title insurance. And tonight joining us to cover this topic is experts in the field, Quick Abstract LLC, and their CEO and title agent Keesha White is joining us for a little deep dive on what the HUD-1 document is and what title insurance means for your rehab property. And we're really going to hopefully get into a lot of information and pull up some sample documents so you can get a sneak peek of what that'll look like when you're ready to go close on your first property. And like I said, be sure to stick around until the last 15 minutes when we have a little Q&A with everybody on the call. And you can enter your questions for that using the Q&A function on Zoom. So you'll just click the two little chat bubbles on the toolbar and type in your questions as we go, and we'll get to them at the end. So that's my spiel up front. Thanks for sitting through that, Keesha. I'll let Keesha introduce herself. We're really happy to have her here. Like I said, Quick Abstract is experts in title insurance, and we work we worked with them on a ton of projects. It seems like there's a never-ending pipeline of closings
Right.
working on, and a lot of special cases, which I know Keesha will sympathize with. So I'll let her introduce herself. Thanks so much for joining us and being here tonight, Keesha.
Thank you so much, Derek, for having us. Just to reiterate, my name is Keesha White. I'm the CEO of Quick Abstract. We are a title insurance company here in Philadelphia. We cover all of Pennsylvania, but our primary focus is the Philadelphia area. Thanks for having us. Tonight, we're going to go over a little bit about what title insurance is. Many of you may not know, but title insurance is another key component and something that's necessary when it comes to you investing in property. Reason being is the title insurance is what protects your investment. You hire us as a title company to run a search on a property. We want to make sure that that title is clear. It doesn't have any liens, any judgments. There's no back taxes. There's not a PGW bill that could pop up. These things are all necessary components to the property that you're going to buy, because essentially you want to be able to resell it, or you want to be able to pull money out of it. And neither of those can happen if your title is not free and clear. So you hire us, I call it like we do like a background check or a little investigation on a property. Then we bring a report to you and we let you know, hey, these are the issues on a title report. This is what we're going to do to rectify it to get you to closing. Or you may say, hey, there's just too many issues on the title and you may need to walk away from it. So we'll kind of dive into that, but you must protect your investment overall. And one of those ways that you protect it is by making sure that you have title insurance. So any event something does pop up, you can pull back on that title insurance policy. The
Great.
good thing about title insurance is that it's a one-time fee. So it's not like homeowners insurance. You pay it one time as long as you own the property, and it pretty much covers you throughout the duration of ownership.
Wonderful. Awesome. So first, before I get into asking some more about what you just mentioned, why don't you tell us a little bit first about Quick Abstract and what your company does, and a little bit about your background and history, and just kind of build your credibility and like why are
Gotcha.
you the one talking to us about this? Because you're
All
certainly an
right.
expert.
So thank you so much, Derek. So I've been in the title business since 2001. Started off working as a paralegal for a title company, worked there for about 3 years. Then I went to work for a larger company as a paralegal, as a closer. And then in 2008, when the economy went bad, the title company shut down. And at that time, I wasn't able to find a job in the title industry that would pay me what I was making at the title company. So I decided to open up my own title company. So Quick Abstract started in 2008 as just a title search company, doing just the searching and a background check for the title companies. And then in 2015, 2015, we added the title insurance piece to that, to where we're able to offer the insurance. So I've been in title for over 20 years. We have a staff of 15 people that are all under my direction. And everybody that works for us just has a passion and desire to learn about title. And of course, I train them so that they can learn how to actually do title. We are the only Black-owned and operated title company here in Philadelphia, which I'm proud of. We hire young people because I'm passionate about making sure that we have enough presence in the title industry to be able to help with a lot of these title issues.
Okay, great. Thank you so much. And like I mentioned up front, I can't name how many Jumpstart projects have used Quick
Yes.
Abstract to close, and
Right.
they're certainly familiar with our process and you know what we look for, and I can't think of a case where you guys haven't been on top of it and you know
Right.
made the
Thank you,
closing
Derek.
happen. Hopefully as fast as it could, but we all know that there's things that come up that make that not possible. But the important thing is that you're there working with us, so we appreciate it.
Yes.
Okay, so I'm going to ask a few questions that might seem very high level and not
No, you're
like
fine.
I want to kind of get the definitions out there for people who maybe know that title insurance and real estate are in the same world, but don't know how they really tie to one another. If you could just explain what is the title of a property, no need for a detailed explanation, but if someone's unfamiliar, what does that mean?
So the title of a property is the document that shows who the property owner is.
Is
So
it
the title,
similar to a deed, right?
similar to a deed, exactly. Some people call it a title, some people call it a deed. Basically, it shows you who has the legal ownership to the property in question.
Great. And then what is title insurance in relation to that?
So title insurance is the insurance that the buyer purchases. They pay us, the title company. And basically what we're doing is we're giving you a policy that says, hey, the title that's in your name is free and clear. You won't have any issues if you go to sell it, if you go to refinance it, that you have a title that's free and clear of any liens, judgments, taxes, water. We issue that policy and let you know that, hey, you're covered in your investment, and that coverage sticks with you as long as you own the property.
Great. Yep. And that leads perfectly to my next question. Could you explain what a lien and judgment is? And when you said water, what do you mean by water? That it is, there's typically a water bill associated, right?
Yeah. So when liens and judgments are typically, they are items that are issued against the homeowner. Sometimes a lien might be, sometimes if the city maybe tore down the property or knocked it down, they'll put a lien on there, which then requires a monetary amount in order to clear it off. Judgments can be personal and they can be also against like an LLC. Judgments are usually entered by creditors. If you owe people money, if you have an old landlord that you didn't pay rent to, if you owe PGW or the city of Philadelphia money for taxes, those are all things that they can assess to you as a lien or a judgment that could essentially affect the property. When I mentioned water, water taxes, and PGW are the three items that stick with a property. So regardless of how many times that property changes ownership, if that property has back taxes, if it has an old water bill, if it has an old PGW bill or PGW lien, those are items that stick with the property. So that's why it's also important to get the title insurance, because you don't know what the people before you did as it pertains to the water, the taxes, and the gas. So
And
those are items.
I don't know what your experience is, Keesha, but I've been seeing that water bill problem come up more and more recently. It seems like,
More and more.
yeah.
Yes, and we also have properties that don't have meters in them, which also creates another big issue, because then you can't really determine how much money is owed. So these are all things that we as the title company, we investigate, we do our background research to disclose that to you so that you're aware of, what you're purchasing.
Gotcha. And so when people engage a title company, typically what they're asking for is to do a title search, right?
Exactly.
So talk, just briefly, if you could go over what is your process for the title search, what is, and not even like, what do you do differently than another title company might do, or do all title companies do the same thing? What does that title search process mean?
But pretty much the title search process is typically the same wherever you go in terms of when we run title or we run a background check or a search on a property, we have to search the public records. And the public records are where they are in City Hall. So everybody, generally, all title companies should gather the same information. Sometimes things are missed, but we all go to the same hub to gather this information.
Got
And basically, the title search discloses who the owner is. We go back sometimes 100 years to make sure that every owner that was entitled to that property actually had a right to be entitled. Fraud is a big thing in the city of Philadelphia. Fraudulent deeds, tangled titles is a big issue here. And we just make sure that we do our due diligence and going through the chain and making sure that somebody didn't fraudulently sign somebody's name. Those are common title problems that we run into. But that searches that goes back 100 years. Like I mentioned before, it searches the water. If there's any water liens, it searches any gas liens, any delinquent taxes. It also searches whether the person before you had any judgments or liens. You may purchase a property and realize that the person before you had an IRS lien out there that they weren't aware of or that wasn't disclosed to you. Those are all items that are picked up in a title report that we can then disclose to you, the buyer, so that you can make an educated decision as to whether you want to purchase it.
Great, thank you. So let's talk about sort of when a JUMPstarter is going to encounter this process. Obviously, we know anytime a real estate transaction takes place, title insurance needs to be obtained, right?
Absolutely.
Now, what for a JUMPstarter, who might be looking at properties on Zillow or Atlas or having their realtor show them places, or they, got texted a deal from a wholesaler, are they emailing the wholesaler, or are they emailing you as soon as they say they think they might want to buy that property, or are they waiting until the last minute before the seller's like, hey, when are we trying to close? How early on should someone reach out to you and say, hey, I'm interested in buying this property, I want to get title insurance?
So usually you should reach out to the title company the minute you have an agreement of sale signed or a sales agreement. The minute that agreement is signed, which means you now have an interest in that property, is when you should order the title search. That way it gives the title company enough time to do what they need to do, to run any searches, any background checks, to make sure that the title is clear. And it also allows you time to be able to disclose to the seller if there are any issues that the seller needs to correct prior to settlement. The last thing you want to do is order title 2 or 3 days before closing, because then you're rushed, things aren't done in a timely manner. And if there are issues on the title, which a lot of times there are, you want to allow the ample time for the title company to clear those items up before settlement. So as soon as you get that agreement a sale sign, you should be reaching out to a title company to run title on that property.
Got it. Yeah. And I always tell people, their first question for us is, how fast can you close? How fast can you close? And usually the answer, unfortunately, is as fast as the title search can be completed. So yeah, I totally hear what you're saying, and think it's really important for JUMPstarters. As soon as you get that under agreement and you, like you said, show and express like written interest in the property,
Exactly.
you want to move forward.
And we try to do it as quickly as possible, Derek, but as you also know, we can get a title back in a week, but if there's issues on it, it may take a week, 2 weeks, sometimes months to then clear up those title issues.
Right. And
So,
the earlier on you have someone like you to tell you that, the better.
Exactly, the better off you are. Absolutely.
Awesome. Thank you, Keesha.
You're welcome.
The next question I have is sort of specific to the documents that I want to pull up and go through, like samples of. Like for Jumpstart or a lender's requirement, we need to have a couple pieces of documentation before we can say we're clear to close. We're good, we see that the title is clear. We see that you paid for your title insurance policy. Here's the loan package. Can you talk about, like, first, the HUD 1 document, sort of explain what that is in relation to the property, and then the title commitment, which is the other piece of the puzzle that we need JUMPstarters to obtain. What are those two documents, while I'm going to organize on my end and get the screen share up so we can take a look at them?
Got you. Okay, so the title commitment or the title report is the actual report that we use to disclose whether we can actually insure the property. And that title report will include who the property owner is. It'll include information if there's a lender involved. It includes your sales price. It includes your loan amount. It also includes a legal description for the property. So you always want to make sure that the legal description, which we also do the background search on a legal description to make sure that whatever property you're buying is actually listed in that legal description. There's been times in the past where we've seen title companies convey the wrong property simply because the wrong legal description was listed in a deed. That is something that the title company, we search and we make sure that, hey, whatever property you're closing on, you actually have the legal description listed with your name on the title. And as I mentioned, if there's any mortgages on a property, the title commitment discloses that. Any taxes, judgments, liens, water bills, PGW, all of those things are issued on the title commitment, which allows us, the title company, to determine how much has to be paid at settlement. Once that title commitment is issued, and prior to closing, we have to generate what you call a HUD-1. And that HUD-1 settlement statement, some people call it a HUD, some people call it a settlement sheet, basically has a detailed documentation of all the numbers that's included in your purchase. So let's just say, for instance, your purchase is $100,000. That number is listed on a HUD-1. Let's say you get a Jumpstart Germantown mortgage for $50,000, that's also listed. And we also list any fees that are associated with the title, such as title insurance, transfer tax, which has to be paid on every transaction, any judgments or liens that the seller has to pay, and of course, any items that the buyer has to pay. All of that's listed on that HUD-1 settlement statement. And it's basically your guide to tell you how much money you need to bring to settlement. So a lot of times right before closing, settlement statement goes out, you review it, we go over it with you to make sure you understand exactly what you're paying for. And then that sheet, once it's signed, is legally binding. And that's kind of like your receipt for buying the property, is what you go to show the city to say, hey, I just purchased the property. And then that's pretty much.
Yeah, that's great. Thank you for that explanation. So I'm going to, well, first, before I share my screen, I just want to remind everybody that you can enter questions for Keesha. I see we have one so far, but anything that comes up, please enter it into the Q&A tab on Zoom, and then we'll get to them in about 20 minutes once we start to wrap things up. But I'm going to share my screen, and hopefully you can see this. Can you see my screen, Keesha?
Yeah, perfect.
All right. So I'm actually, would you mind if we start with the sample 3? Because I think this one most accurately reflects what a Jumpstart, typical Jumpstart loan might look like.
Sure. Not a problem.
Yep. So first, I want to just, for people who are either in the process of looking at applying for a Jumpstart loan or maybe a Jumpstart borrower, you're definitely familiar with this document. And this is something that we require in order to be clear to close. And it's something that Keesha will send us, or somebody at Quick Abstract will send us to review, and then we approve it and move on towards, like the next step. So this is something that you're going to see if you're closing on a property and you want to know what specific line items mean and how to kind of find the information you're looking for. So Keesha, why don't you take us through this first page here? I see you've highlighted some information. If you could, and just to be clear, here's this is a Jumpstart loan that we used, and here's our name of the lender up here, and all the other information is based off a real transaction we did.
Yep. Okay. So I'll just go over it with you real quick. This is a settlement statement, or HUD-1. What I did was I highlighted the key components just to be able to demonstrate to you what an actual HUD-1 or what is entailed in the HUD-1. So when you look at line 101, it says contract sales price. So basically that's the number that you're paying for the property. So that number can vary depending on what your sales agreement states, but that number, $57,000, is what this borrower paid for this particular property.
Great.
Okay, so when we go to line 106 and 406, now you heard me mention earlier that sometimes you have a property where sellers, you have to pay taxes. What you see on line 106 and 406 is you have to give a credit back to the seller for the taxes that were paid. So in this instance, the seller of this property paid their real estate taxes for the year, okay? They paid the taxes for the year. However, from the day of settlement, which you see where it says settlement date 4/26 up here, and then 4/26, the settlement date on 106, from that date to the end of the year, you as the buyer are responsible for reimbursing the seller for that amount. Okay, so although they paid the taxes after the 26th of April, the seller is no longer in the property. Now you own the property as the buyer, so the taxes are essentially your responsibility. So what that line item does is it debits your side of the HUD, and then it gives a credit to the seller at settlement so that they get that money back that they paid up front.
And
So
if I could,
essentially they paid it and then they get it back at the closing table.
gotcha. So, and then is that standard? Is that how everyone is done, or could this be? Is that negotiable? Negotiable?
So, I mean, it is negotiable depending on how your contract is structured. But
Mhm.
typically, if the seller pays something that extends through the end of the year, they are entitled to a credit for the time that they don't own the property.
Got it. All right. So moving on down here to 201 and 202, or 201, it looks like mainly.
Is your screen distorted a little bit, or is it just me?
Um, I don't think it's. I zoomed in a little bit. Did that help at all? Is everybody seeing all right? Maybe the internet connection went off.
I can see all right.
You can
You can
see?
see.
All right. I'll work through it. No problem.
Okay.
If it
Okay.
looks good on your end. So the next line item would be the deposit.
Mhm. Yep, that's right.
So when you enter a contract with a seller, usually you have to put down a deposit. It varies how much you put down. It could be anywhere from $1 all the way up to 10,000, just depending on what you have agreed on to give the seller to take the property off the market. So what you'll see on line 201 is $2,500, which is a deposit that this buyer put up as a good faith deposit, just allowing the seller to take the property off the market. And keep in mind, the earnest money deposit that you put up front does not go to waste. It does get applied to your closing costs at the end, which is what you see here on line 201.
Got it. And if I could ask, does that ever get included in the purchase price, or is like if somebody came to us for the Jumpstart loan, right, and said the purchase price was 57,000, but then we see on here that they actually had a 25,000 earnest money deposit, would the purchase price technically be 59,000? Or is the, I guess, is this contract sales price ever less than what the like offer or the purchase price for the property was?
No, so if the sales price is 57, and let's just say this borrower gave 25,000 directly to the seller, we can still reflect that on the sheet. However, it's money that the seller now has, not the title company.
Gotcha. All right, gotcha.
So any
And
money that you put down as the buyer should always be applied to your end number. Always keep that in mind. Never just give someone money or give them a deposit and not have it applied to your end number, because that can be costly.
yep. So and I like your way of describing it. It's not like that gets reduced from the purchase price or anything. It's just that you have to pay less for your end of the closing costs. Yep.
Exactly. Yep.
And then if you could just explain the line under that at 202, principal amount of new loans, what is that number reflecting there?
So principal amount of new loans is in this section. So it looks like this particular borrower had a loan for 136,285 from Jumpstart.
Right.
So
So,
Jumpstart loaned them that amount of money for this particular property.
yep. And then for like that would be 85% of the total project cost on our books, So when you're getting your Jumpstart loan, that 136,285, that's 85% of what the project is going to cost to complete. Doesn't necessarily mean that we're funding 85% of the purchase price, right? It's more so this separate line item of you're getting a new like construction loan for the property, right?
Yes, absolutely.
Cool. All right. And then moving down, we see at the bottom of this page at like line 303, we have cash from borrower and cash to seller. Why do people need to know what those numbers mean?
So those two numbers are really important because the cash from borrower is that number is the number that's needed for you to close on the property that you're buying. So before settlement, usually it's a day or two prior to, we'll email this over to you, and that number on the left, the 24,908, is actually what this particular buyer had to bring to settlement. The cash to seller on the right-hand side is actually the number that the seller received once they sold this property. So they listed it for 57,000, and then they ended up walking away from the table with 50,000 less any closing costs or liens or judgments or whatever we had to pay out at settlement.
Keesha, does this factor in sales commission?
So yes, it will. However, this particular transaction, there was no realtor involved, so there was no commission. Typically, commissions are paid on the seller's end.
Okay.
You may sometimes see a buyer pay a commission just depending on how the contract is structured, but 90% of the time the seller is paying that commission. And of course, that money comes out of their proceeds.
Got it. So yeah, that would be under this 7,000 less reduction due to seller. If there was sales
Yes,
commission, it would be coming out of that line. Yep, gotcha.
absolutely.
All right, now I'm scrolling to the next page of the settlement statement down to line 808, and we see lender holdback. So this is at 99,886, and which that's less than what our loan amount was up top. So what does the lender holdback mean?
So the lender holdback is what the lender actually retains or what the lender actually holds back from the loan. So you'll see when we were on page 1, the total loan amount was 136,285, but the amount that the lender is holding back is 99,886. So
Yep.
essentially on this transaction, they fronted some of the money for the borrower, but not the entire amount. And
Right.
usually the lender holdbacks are there because there's construction that needs to be done. So the lender, divvies out those construction draws as they see fit.
Yep. Great. So this number would, if you're looking at your Jumpstart pro forma, this number should equal exactly what your construction budget is, on our end. And that's what, after closing, like Keesha said, that's what like your bank basically is to withdraw money from to get the project completed. So, we're dispersed, even though it's $40,000 or $36,000 less than what's up here. That's what we're dispersing at settlement, goes straight towards the purchase price, and then we hold everything back. Yeah. So thank you for explaining that. And then we have hazard insurance premium. What is this for?
So hazard insurance premium, you are required not only by Jumpstart or by any lender, but you should want to have insurance on the property that you're purchasing. So that's usually paid either before settlement or sometimes it's paid at the settlement table. And basically, you just want to make sure that you have some kind of insurance on the property. Sometimes it's builder's risk insurance. Some people call it homeowner's insurance. It protects the property if there's a fire, if there's any damages, and it also covers the lender because the lender wants to make sure that the money that they're loaning you is protected. So that's usually something that you either pay before settlement, or in this case, the borrower actually paid it at the settlement table, so it came out of the closing costs.
Gotcha. Yep. And again, to reference it with the Jumpstart loan, like when we send you your letter of commitment, well, like right under the requirement to get title insurance is get your property insurance, which is like Keesha said, like dwelling and liability coverage, and that builder's risk insurance. And there's all sorts of names for the types of policies, but we'll send you exactly what you need. You get that, pay that policy in advance, and it shows up here. All right. And then doc prep fee, what is that for there?
So doc prep fee is just the fee that we charge as a title company for preparing the documents. Usually it's a charge that's charged to the seller. However, on this particular transaction, the buyer agreed to pay it on the seller's behalf. So there are times when buyers and sellers, if there's not enough money on the table, or again, depending on how your contract is structured, sometimes you may have a contract that says a buyer pays all closing costs or seller pays closing costs, but only up to a certain amount. And when that happens, then of course the seller pays what they agreed on in the agreement of sale, and then the buyer picks up whatever the difference is.
Got it. All right. And then the last, or not the last section, but towards the bottom here, we have the title insurance policy, which we're going to open up another document which explains that further, right, Keesha?
Yes.
So could you explain just sort of what this is listing here and then continue on, I
Sure.
guess, this whole bottom section under the government recording and the
Yep,
additional charges?
not a problem. So your title insurance is actually the premium that you're going to pay for your title insurance. And you'll see on line 1109 and 1110, what we offered the buyer here was what you call a simultaneous policy. So the buyer in this transaction got an owner's policy for 100, I'm sorry, for 57,000. And they also got a lender's policy for 136,285, in which they were charged for both. And basically what that does is we provided a lender's policy that protects Jumpstart Germantown. And then we provided an owner's policy that protects you as the owner as long as you own the property. And this insurance premium is always based on what the sales price is and what the loan amount is. So it's going to case by case basis, because obviously if your sales price is higher, your title insurance premium is going to be a lot higher. And in this instance, the borrower paid $1,991.29. And again, that number varies depending on your sales price and depending on what your loan amount is, and also depending on what your lender requires from the title company in order to get your loan closed. And then, as I mentioned before, it's just a one-time fee. So it's not like you're going to pay $1,900 every year. You pay it one time, and then after, you pay it for your owner's policy, you're covered. Now, if you go to get a loan, which you will have to refinance out of this Jumpstart Germantown loan, your new lender is going to require that you purchase another lender's policy to, cover, of course, their new loan and their interest, but your owner's policy is only paid one time.
Mm-hmm. And just to ask another follow-up question about that, with the I've heard of keeping a title open, right? Or like leaving the policy
Mm-hmm.
open. When I've heard that reference, it's like somebody purchases a property outright, with their own out-of-pocket funds, and then later
Mm-hmm.
wants to get a mortgage or like short-term financing.
Mm-hmm.
And rather than pay like the full amount twice, there's a mechanism for you to like pay less, right? Can you explain that a little bit?
Yeah. So if you purchase a property cash and you leave it open because you're then going to go get a lender, what we do is we'll keep the title open so that you don't have to pay title insurance twice. So let's just say, for example, you pay cash for a property of $50,000. And then let's say in 3 weeks you go to Jumpstart and you get a loan for 200,000.
Mm-hmm.
What we do based on a title insurance calculator is we're able to keep the policy open to where we can give you what you call a simultaneous policy, which is a lot cheaper. And then you only have to pay for the policy one time as opposed to having to pay it twice.
Mm-hmm.
So that, keep that in mind if you're purchasing a property in that manner. Always ask the title company if they can hold the title open. And usually we'll do that for about 30 days, maximum 60 days. We don't want to keep the title open too long because, obviously things in the city of Philadelphia, you don't want somebody to steal your property or have something pop up against the title. But we will offer that as an accommodation for someone that's purchasing in that way.
Okay, great. And then lastly, if you could finish up with the government recording and additional settlement charges, what are these numbers that people are seeing here?
Okay, so in section 1200, now these are fees that you have to pay to have your deed recorded and also to have your mortgage recorded. So you'll see on line 1201, the recording a fee for a deed at that time was $256.75. And then a recording fee for a mortgage is $226.75. These are fees that go directly to the city of Philadelphia. The title company doesn't hold on to that money. They're fees that the city of Philadelphia is entitled for, because you want to make sure that everybody is made aware that you are now the new owner of the property and that you have a mortgage. So those are two fees that have to get paid. The other fees that go directly to the city and the state are your transfer tax fees. Transfer tax in the city of Philadelphia is 4.278 of the sales price and or the assessed value. Okay, so in this instance, so if the assessed value is higher on a property, we're going to take the assessment as opposed to the sales price. And in this instance, the sales price on this property was 57. However, the assessed value, I believe, was significantly higher. So what we did was we took the assess and we multiplied that by 4.278. And then that gives you your recording fees, which are owed to the city of Philadelphia and to the state.
And
So the state gets 1%, and then the city gets 3.278%.
got it. And which line here? The transfer tax is under the government
So it's,
1202?
it's on 1202 and 1203.
Got
Now,
it.
I will say this, transfer taxes typically are split between buyer and seller. In this particular transaction, they had an agreement between buyer and seller that buyer pays all closing costs. So you'll see that those numbers are on the buyer side. But typically the transfer tax is something that's split between buyer and seller.
Okay, great. And the last thing I just wanted to point out was this total settlement charges under here. These numbers obviously are different than the cash to seller versus cash to buyer. What is this reflecting down here at the bottom?
So this number at the bottom, so what you see on the left is 106,233.87. These are the total closing costs that our borrower was being assessed to do this loan with Jumpstart Germantown. So basically all the numbers that we went over, the 99,000, the hazard insurance, doc prep, title insurance, government recording fees, and also the fees that were listed on the first page, that's an accumulation of what the total settlement charges were. So we take that number 106 and we subtract it from the first page where we had the 138, and then that brought us to the cash to close for the borrower, which was 24,908.62.
Got it. That makes perfect sense. And then over here, the same thing with the seller, right?
Same thing with the seller. As you see on this particular property, the seller had a lot of debt on it. They had water. You see it on 1304. Yep. They owed taxes, 1303. They had nuisance liens, 1301. And then they also had personal judgments, 1305 and 1306. So those numbers listed on the seller side is what the seller was responsible for and paying for, because those are the items that actually showed up on the title report when we did the search. Okay, great.
Yeah, so that was a super fast run through of the whole document, but I'm sure Keesha was able to do that because she's looking at them all day. But you'll become more familiar with them as you do, deal after deal. You'll understand, how to read these and hopefully read them on your own, without the assistance of someone like Jumpstart or a title company. But I also want to point out that a lot of the points that we were making there were like, oh, well, sometimes it could be this way, right? So right. That's why we're kind of always like checking it and sending it back and forth to one another to review it and confirm it, because we want to make sure that you're not paying for something that the seller agreed to pay for, or in the opposite, you don't want to forget to pay something that is in the contract saying that the buyer is going to pay for. So it's really important. Yeah. Really important that you know what's going on with this document, and thank you, Keesha, for walking through us with it. I think I'm going to skip sample 1 and 2 and just quickly look at the title commitment sheet, so that
no problem.
Let's let me share that. There you go. Can you see it now?
Yes.
Okay, great. So this is a title commitment document, another sample loan application, and there's nothing highlighted on here, but or there is some highlights on here, but why don't you just kind of explain this information at the top? What is this showing? We should be familiar with, at least the owner's policy and the loan policy. We saw that on the HUD, but what is this front page telling us here?
So front page is basically telling you who the title company is. It gives you the property address. It also tells you who the title underwriter is. So when you pay your title insurance premium, every title company in Philadelphia has to be backed by an underwriter. So in this case, Stewart Title is the underwriter for this particular deal. And Stewart Title is going to be where your actual title insurance policy comes from. So if Quick Abstract, God forbid, were to go out of business today or tomorrow, you would still be covered by Stewart Title because they're our underwriter. And they're actually the ones that are underwriting. They take advisement from us, and they're actually underwriting the title. We have a commitment date, which is number 1. And on that commitment date, that August 23rd, 2023, that is what we search the property records up to. So anything prior to August 23rd, 2023 will be disclosed on this title commitment. Anything after August 23rd, of course, is not disclosed because we're at the mercy of City of Philadelphia records. So at the time this was issued, August 23rd was where the city records were up to date.
Got it.
Up to that particular date.
Okay.
Again, you have your owner's policy, which is 2A, and then you have your loan policy, which is 2B. We list who the lender is, and on this particular transaction, PNC was the bank. You see the owner's policy was 85, and then the loan policy was 63,750.
Okay. Cool.
Going down.
I'm gonna just scroll through here and get to the highlighted parts since we're running a little short on time.
That's fine.
Yeah. So
basically on a title commitment, a lot of the language is the same. The things that we highlight are the deed, the mortgage that you're getting, and of course the taxes, and then of course if there's any liens or judgments. Those are important, and we highlight those because we want to make sure that the seller or the seller's agent is aware of what is actually against the title.
Great. Yeah.
And then everything else is just standard exceptions and things like that.
Here's those liens and judgments we were talking about. Like Keesha said, they're always highlighted kind of to point them out to you. And then that's what's work to be cleared before closing.
Yeah, absolutely.
So folks stuck around. So we're happy to have
cool.
And I'm gonna just go through these questions and get your answer from them, okay?
Okay, no problem.
All right, first comes from Ina, and they were wondering, if I'm considering a property at a sheriff's sale, is the title search still needed? Can you do like a surface type of check on a property you may be considering? So I know sheriff's sale and title insurance are a tricky combination.
Yes,
so
very tricky.
What should people know about that?
Yeah, so if you're considering buying a property at sheriff's sale, you should do a title search. Title searches range anywhere from $150 to $300. To me, it's peace of mind. You should just do a search just to make sure that you are aware of what you're buying, because there's this common misconception that the sheriff's sale clears all judgments and liens, and that's not the case. So I'd rather you at least do a search so that you're aware of what you're purchasing. And in the event, if you are purchasing a property where certain things aren't covered, then at least you know beforehand, and rather than find out later, which a lot of people do.
Got it. And the next question is from Eugene, and a couple others had this question as well. They want your contact information. So how can people get in touch with Quick Abstract, and if they want to use your services, where do they go?
Okay, so you can follow us on IG at Quick Abstract. You can go to our website, quickabstract.com. That has all of our information. All of my information has my email. My email address, and I'll just say it, is kwhite@quickabstract.com. And that's kwhite@quickabstract.com. The office telephone number is 215-232-3683. Again, that's 215-232-3683. My cell phone number is 267-250-0742.
Great. All right. And Keesha, I'm going to make sure we get that out to people, and we'll send it in a follow-up email tomorrow, as well as type it in the chat here after I ask the next question.
Okay, cool.
So thank you, Eugene. Next question comes from Felicia, and she says, do you offer a service to alert if items have come up against your title since the purchase?
So no, we do not offer that service, because obviously we would have to keep searching. Which you should do. There are some services out there called Title Lock. And basically what that does, if there's anything that pops up after you purchase the property, I think it's a monthly service fee. You can also, as a property owner, just do your due diligence. If you want to, every couple of years, just do a quick title search just to make sure nothing popped up that you're not aware of. Usually if something pops up after you purchase it, It's usually due to something that the borrower has done, whether they owe somebody some money, somebody entered a judgment. But if you want to just, actively get a search every few years just to make sure that your title is clear, that wouldn't be a bad thing to do.
Great. And somebody or a couple people asked, what are the costs of obtaining title insurance and title report on the house? So I know we were going to go over like a fee schedule or rates sort of breakdown, but in general, if you could let people know how they can estimate what they're going to need to pay for title insurance for a property.
So in general, and you can also Google this, it's public knowledge because our rates are regulated by the state. So if you go to my title company or another title company, what you pay for your title insurance premium should be the same. Title insurance can range anywhere from $500 all the way to, I don't know, 5 or 6,000, just depending on what your sales price is. So if you want, you can Google Pennsylvania title insurance rates. And if you Google it, and also Derek, if you want to send out what I sent you earlier, that
Yes.
insurance calculator, on that title insurance form that I sent Derek, it allows you to see what your purchase price is, and then you just scroll over and it'll show you what your title insurance premium will be. And again, that's a fee that's regulated by the state. So regardless of whatever title company you go to, that number should always be the same because it's generated through a system. It's not something that we just make up on a case-by-case basis.
Got it. Yeah, and thanks for making that clear. Earlier, I think I slipped up and said that it depends on the title company, but probably the process depends more on the title company, but the cost is
Yeah, the process does, but the actual premium should be the same.
Got it. All right. And the next question here comes from Deshaun. He says, can that faith, or maybe he's saying good faith deposit or down payment go towards the closing costs? And I believe that's correct. Yep, it gets deducted from. Yep,
that is correct. It gets deducted from your closing costs at the table. Yes.
So yeah, that box where it said cash from borrower or cash from buyer would be reduced by whatever your
by that amount. Mm-hmm.
Yep. All right. Yep. Thanks, Sean. Next question says, how long can you keep the title open for?
So every title company is different. I would only do it for our company. I wouldn't do it more than 60 days. Okay. And here's the reason. If you buy a property, you want to make sure that public record knows that you're the
Uh-oh. Paula, did Keesha freeze for you again?
Yeah.
Okay. Oh no, I'm sure her computer maybe crashed again.
And enough time for you to kind of get the mortgage or whatever you need to get. Anything after 60 days, it just becomes a risk to both the title company and also to the buyer because the deed is still in the old owner's name.
Got it. All right. And Keesha, just a heads up, I think you cut out for like maybe 10 seconds there, but I got most of your answers. So I think we're good.
All right, cool.
60 days, and it depends on the title company. They're going to have different, ranges of how long you keep it open for. Got it. Yep. All right. Deshaun has another question. What if you want to transfer title into or a title or deed into an LLC or trust? I'm assuming the process is pretty much the same with the title insurance, right? It's just that there's not going to be,
process is pretty much the same, except if you transfer it into a trust or into an LLC, usually there's not a dollar amount. So usually we would give you a title insurance premium based either off the appraised value or what the assessed value is, and that's what we would base your premium off of. But anytime you transfer the deed, whether it's to an LLC, to a trust, whether it's from family members, you want to always make sure you get that title insurance piece because again, you never know, what could have popped up that you're not aware of. Got
it. Next question here comes from Felicia again. She says, with reference to the section on the HUD one that's listed personal judgments, are there personal debts that creditors are allowed to place positions against the property? Can you give me an example of this?
Yeah, so let's just say you have a credit card bill with Capital One and you didn't pay it, or Discover Bank. Those are two popular ones that we see a lot of times. They can enter a judgment against you. And if you own property, when we go to search the public records, we search it by your name. And anything that pops up against your name and you own real estate actually is going to pop up against that property. So you want to make sure that, you stay on top of those things, because a lot of times we don't think that credit card bills are lienable, or, if you get into a car accident, someone goes to sue you, or like slip and falls. We see that a lot. Those are all items that if they go to court and the judge awards a judgment against you and you own real estate, that could affect the real estate that you own.
Got it. All right. Well, and our last question here for you is from Ina again. They say, do you only do title policies in PA, or will you work outside the city or in other states?
Right. So right now we're in PA. We are expanding to Baltimore within the next month or so. And then we also plan to be in New Jersey as well. So we are growing and expanding, but at this moment we're in PA.
Congrats on that. That's awesome, Keesha.
Oh, thank you, Derek. Appreciate you.
Baltimore is a good second city to be in.
Absolutely. It's like the new Philly, how Philly was years ago. Yeah.
Right. All right. And one more question here from Teresa. She said, hi, so when you purchase a property and get the initial title insurance, that doesn't protect you from any subsequent liens or judgments?
When you say subsequent, so title insurance is going to protect you up until the day of settlement.
Yep.
So anything that popped up in that title before you close, we are going to cover.
Got it.
If you close on that property and judgments and liens pop up after, that's a separate policy that we can offer you. It's called an enhanced policy, which covers you any event something pops up that wasn't made aware on public record, which happens sometimes. But that's an advanced policy that you must purchase. Now, if you purchase the property and you get title insurance, and then after you close, you find out that judgments start popping up against you as the buyer, you wouldn't be covered under that. You would be responsible for those.
Got it. All right. Well, Keesha, thank you so much for joining us. This has been really fantastic. Derek. I love doing deep dive on things that like I see every day, because I constantly learn new things. So thank you for answering all my questions and all our attendees' questions, and all you do for Jumpstart. We love it.
No problem. Thank you for having me. I appreciate you.
Of course. And like I said, we'll be sure to send out your contact information. So hopefully Jumpstarters will be reaching out to you with any follow-up questions or looking for title.
Yeah, feel free to call me. You can text me, email me. I'm pretty accessible and, always willing to help. And, any questions, we're here.
Wonderful.
And when you go to buy your property, make sure you come to Quick Abstract.
Yes, that's right. That's right. You had to get the tagline in there, right?
Had to get that in there, right?
All right. Well, thank you so much. And just to close things out here, again, we have our upcoming events. Go to jumpstartgermantown.com/events and you can register for those. The next two are also virtual, but we do have an in-person one coming up next month on the 13th with Ryan Spack. So be sure to sign up for those and get on the RSVP list. And lastly, like I mentioned up top, the recording of this will be available online at jumpstartgermantown.com/library. And I think we referenced the HUD visually quite a bit, but I think I'll be able to make a podcast episode about it and maybe snip out some of the parts where we were just answering questions. So hopefully that'll be available for people. And like I said, go to jumpstartgermantown.com and check out those resources. But thank you so much, Keesha. Have a good night and appreciate it. No
problem. Take care. All right. Thank you.
Thanks, everybody. Appreciate you staying on the call. Have a good night.
Bye-bye. You too.